If you desire to ultimately generate profits in your trading or enhance your trading business to the next level, then I have precisely the right solution for you today. If you apply these valuable tips and tricks to your trading, I am extremely confident that you will significantly elevate your trading to the next level. It does not matter which strategy you are utilizing, whether it is supply-demand, smart money concept trading, ICT, or if you prefer relying entirely on indicators, it can all effectively work for you and contribute to your success in the trading market. But if you're thinking, well, there's still a hitch, then I have just the right thing for you today, and you should stick around until the end. Before we jump into the chart in general, we first need to add an indicator, which you already know by now. I have the TSA TDI with me. You can find it in the video description. Scroll down once, open the link there, save it as a favorite, and then you will find it up here under indicators, then under favorites, and can add it without any problems. We leave it completely as it is. I will briefly explain again how we trade it. For everything that is located above the two dashed white lines in this particular area, we actively search for sell positions, and for everything that is located below this specific area, yes, we actively search for buy positions. Trading the RSI is not as easy as it seems. I won't go into details now, but we're happy to do that in our free Telegram group. Feel free to join us there. The link's in the video description if you want to learn more. And as you can see, we're here on the daily chart for GBP/JPY. Now, no need to turn off right away just because you say, I'm not a swing trader. It's unrelated to that. We will start with the daily chart for now, and then we will actually look at a scalping setup. So today, everything is included. You can do the whole thing now as a swing trader, you can do it as a day trader or as a scalper, but now I've talked enough, let's get started. So on the daily chart, we are currently looking at GBP/JPY and observing the last candle. If we take a closer look at it, it is definitely a news candle. So, however, even if it is a news candle, we will simply leave the news candle alone and not trade it, but we can definitely trade the day after, because if we examine how this candle closed, it certainly indicates an imbalance to the right side, indicating that there is no wick up here, because how does a candle typically form and create such a strong imbalance without any wick on the upper side? It first goes up, forming our wick upwards, and then afterwards it would completely go down here with the body, I would say, completely down here, and the whole thing would then look something like this, with the candle simply closing like that. That could happen, for example. Where are we interested in now? How do we want to trade this whole thing? Are we trading the long position here or the short position? In this case, we can do both, but which option would be more sensible now considering the circumstances? And that is the reason we are here on the daily chart. We examine, all right, what does the general trend appear like? And when we examine the general trend, we certainly observe GBP/JPY in an upward trend. So we are searching more for extended positions than for brief positions. And it is not important at all how the news candle appeared just now, because what did it accomplish? It did not close below the previous low at this point. You always have to examine it very carefully. This candle did not close below the last low, so the entire situation is still within our range, and it was actually news that had an impact. I like to do all of this now with the smart money concept and then look, okay, why did this whole thing react here? Because we have a nice zone here, a nice order block in this area, and you can already see the candle closed right in there. Why is this now a zone? Here we have the last bearish candlestick, so to speak, even though it's green now, but it's the last bearish candle that showed us a doji formation down here, indicating a trend reversal and of course also a break of structure up here. Don't worry, we're currently in the daily chart, but we'll soon move to a smaller time frame where we have our break of structure. Then, down in this zone, we also have an imbalance or fair value gap. Call it what you want, but there's definitely an imbalance in this area. The key point is, okay, we have a zone down here which has definitely been respected. That's very important. We've broken down to the downside. Why did we break down? Because the chart, all the liquidity on the left side here, all those wicks down, where do people have their stop loss? So the people who have their long trades open here have their stop loss placed 100% exactly below this. Now there's liquidity here. That was a liquidity grab. He hasn't taken the liquidity down here yet, but you always have to keep an eye on it and say, okay, that was the liquidity, and down here we theoretically still have some, which could also be taken out at some point. No rush as we're on the daily chart. Keep that in mind. So what's our next step at this point in time? We would say, okay, we are more oriented towards long trades. If we now zoom out a bit, we can even draw a trend line and see, okay, the whole thing has actually reacted really well to this trend line 1, 2, 3, 4 times, which indicates its significance and reliability. If we now apply this directly to the close here, so now we know, okay, this is our overall trend and this is our position. That means from there, we now look for long trades. Why are we also seeking long trades here? Because our indicator down, let's bring it up, is entirely in the lower range and that in the daily chart. This doesn't occur frequently now, despite the fact that you've witnessed it up here, but just for comparison, just like that, if we gaze upward, that was also the highest peak and then it declined from that point. That is certainly a highly reliable indicator. Now we are moving to smaller timeframes, jumping from the daily chart to the 4-hour chart, but we will also enter the scalping area shortly. You can see that the last 4-hour candle already looked very bullish here. What else do we observe when we look down here? Our indicator, let me make it large again, it is more than oversold. So this is also a very positive indication, even if it is below the dashed white lines in this area. You can of course do this with any other indicator. You don't necessarily have to use mine. It's just the one I consistently use. Why should I tell you something new here if it works great for me? So I'll take this one for that. That means here we can already see the first reaction, very good reaction, and now we're basically in the next day. Now we'll switch to the 1HR chart and see how everything looks. By the way, if you haven't created an account yet and want to start trading now, I recommend Vantage. Find the link in the vid description. One of the top brokers, best spreads, low costs, everything you need for trading. You also receive an extra 50% on your initial deposit, so link to it in the video description and then you can begin right away. Looks very bullish at the moment, but our indicator is already rising steeply, so we might see a correction here again. But what we need to mark next here is the subsequent resistance area, where we can be certain that it will continue towards the long side. Clearly, this area up here is where I like to mark in red. This signifies that we need to completely break through this area up here. It is logical, because once we have broken through it, then it will definitely continue towards the long side. If we search for an entry point up there, sometimes it is already a bit too late, so we are inspecting down here for our setup, going directly to the 5-minute chart, but for the time being, we will adhere to the 1-hour chart because we are assuming this is the initial reaction. It descended, reacted. If it descends again, from that point we can search for a new trade and possibly move towards a long trade, meaning we will allow it to continue for a bit more here and observe the outcome. Here, everything actually came down significantly again. The liquidity grabbed down here, which means that in this area, the liquidity is now gone. When we talk about liquidity, it means people have already gone long, placed their stop loss below, and they got taken out here. That means these are always very good points where one would now say, yes, from there one can already trade towards long. If we're in the 1-hour chart now, we could say, okay, let's move to a smaller time frame from there and so on and look for an entry, but the 1-hour chart is still very overboard here, but we can now go to a smaller time frame. That means 15 minutes. You can already see the whole thing corrects down here properly. If we refer to this now on the 5-minute chart, then we see, yes, we're definitely oversold. The liquidity from this area below has been removed, but theoretically, we still have liquidity down here as well. This means that if we want to enter a trade at this level, we should perhaps wait for all of this liquidity to be taken out. Alternatively, if we decide to enter a trade now, then we definitely need to place a stop loss below the second liquidity pool located there. Additionally, we need to pay attention to the fact that there is still liquidity at the very bottom of this area. However, I don't think it will be taken out immediately because it's from the daily chart, and pulling it out quickly is unlikely to happen. Please remember, this is all just normal market analysis and normal market flow. You won't learn all of this overnight, but if you link these multi-time frame analyses together and say, okay, I'll stay now, for example. For GBP/JPY, look at the daily chart every day, the 4-hour chart, the 1-hour chart, then go to the 15 or 5-minute chart and look for your entry there. Believe me, this multi-time frame analysis will bring you so much because no matter what time it is, I can ask you about how DJ is doing today, and then you can either say it's in a sideways trend, it's in an uptrend, or it's in a downtrend, meaning you can tell me right away and also in every time frame you know it. The overall view is then in the daily chart, for example. In the uptrend, we have seen Currently, we are in a downtrend, but now we are looking to catch this upward movement somewhere here where we can identify a nice structure to go long. So we just let it continue and see what happens next. That means letting it run, and he has now taken the next liquidity down here. So that is also out, a very good sign. So what needs to happen now for us to go long? We would need to break this high up here. That would be like a change of character indicating a move towards long. So that would be a change of character, meaning we need to pay attention. Okay, it went down here again, pulled out liquidity even further down. That is definitely checked off now. Let's see if the next candle goes further down. But no, it is now heading towards long. But that does not mean we want to open a long trade yet, because why not? Just look at the chart. It is all building up here and going deeper and deeper, creating a strong foundation for a potential long trade. This could continue like this permanently now. What are we waiting for? Well, for a structural break. Basically, we need, if this whole thing goes down, it has to go up again at some point, and that's kind of our plan, to take a higher, yes, higher low, so to speak, and from there engage in long trading. So now we wait for our setup and see what happens. We have now broken through up here, indicating that this is our signal. Yes, everything wants to turn around now. I believe it is evident that this strategy does not always yield results. There is no 100% strategy, but you always need a plan, and that is the plan, the way I like to trade it very much. Now let's wait for the next candle, and what do we recognize now? Let's zoom in a bit closer. Here we recognize a fair value gap, meaning we have a fair value gap in between here, and we can go ahead and mark that here. So, here we have a fair value gap that is not yet filled, and we are still in the 5-minute chart. Consequently, at this moment, you have the capability to express, okay, I am going long here, so I am opening my long position here after we re-enter there, and I would never place the stop loss below or here or so. No, because remember, overall, this thing is starting with a decent short position here. This means your stop loss should already go below the last low here, and if you want to be completely sure, then theoretically even below the swing low. If I wouldn't do that in this case, then rather split it into 2 positions and wait again further down. Maybe you'll get another chance to trade the whole thing. That means my entry would be here now, saying that from here on, you can trade the whole thing long. We also have a zone below here. You can also say, no, come on, I will wait until he tests the zone down here and then enter the trade. But you may miss some trades as the whole thing is still moving towards long. That's why people trade fair value gaps. However, this doesn't mean the chart enters VWAP and shoots straight through it. Sometimes he also goes down into the zone and moves around there briefly before continuing long. So, let's be a bit cautious here. This is not a crystal ball that tells you everything. So where is our take profit? That is the way we would have allowed it to continue running, and our take profit, well, it is positioned at a very high level. You have to imagine we have now basically taken this button here, which means our take profit is definitely already at a minimum up here. That would already be a 2-to-1, so that would be our first target that we definitely want to achieve. But you know what is cool about this now? We can now look, okay, we are actually overall, we discussed the daily chart at the beginning, we actually want to definitely get above this red zone up here, so that would definitely be our target for taking profit and achieving our desired financial outcome. And now, let's go up to the 4-hour chart. Let's take another look at the whole thing. Our plan was to trade all of this from down here and possibly to break through the red one here, because what do we have up here in this area? We have a big imbalance there that is still there. At the start in the daily chart, we already discussed all of this, which means our profit could also be up here. Let's take a look at the left side. We like to mark our maximum take profit around this area. That would be the maximum take profit. It has reacted here before, also up here, so that would be our maximum take profit, but that's really a 6-to-1. We would take profits much earlier and also set break even much earlier. Please keep that in mind. So let's jump back into the 5-minute chart and see first of all if we even entered the trade. So we let it continue, and here we are actually already in the trade, meaning that the fair gap worked right away, and now we let it run and see how the chart has further developed here, and then in fact it came down again, even retesting the fairway gap twice. We can examine this area more closely, and you can even observe that our zone underneath was tested. Here we have indicated that the wig was also present, which indicates whether we would have utilized the fair value gap or the nice zone below. The order block here, the buy order block, yes, the whole thing would have moved in our direction here. What is also important now is that you are, of course, observing the chart. Being at break even already is definitely a very good idea. The whole thing here has almost doubled. Remember, up here it was 2 to 1, which means it looks very, very good already. Profits should have been taken, and what do we have now? What do we notice here? This breaks the structure further, and that's very good. We have a structure break here, which means we've perfectly caught the button, and this is the structure you want. Break off structure. So the next thing we need now up here, we want to see that taken out at this moment. However, it is crucial to always remember that the chart consistently moves in this manner and also undergoes downward corrections once again. Not always, but for the most part. That indicates it is the typical progression of an upward trend, yes, based on whether it is higher or lower. That is simply the way it is universally. So we'll just let this whole thing continue running here for now, and look, the chart here continued, it stayed down there for a bit, then it continued here again, yes, quite a bit further to the right. That means the area down there has definitely been very good. Here we now have our next break of structure up here, so I will also take a look at the larger time frame, otherwise this whole thing will definitely become too big now. So that means currently it looks like this whole situation here, we had our next break of structure, which we even had in the hourly chart. Certainly at this point we have already achieved break-even and would simply let it continue. You're not in a hurry, you've made profits and are allowing it to continue. Our strategy was to penetrate this order block up here, so we will simply allow it to continue and observe the outcome. We even came down quite far here, which means you might have been able to find a new entry down there, but now it's all happening right up here in our order block. We like to let it run a bit longer, see what happens next, whether we reach our maximum take profit up here. The whole, yes, the whole came from up there, reached the maximum TP, and you see that was the imbalance that was taken out to the left side, and what came after that? An extreme sell-off again. That is just completely normal, and that is the structure I am referring to. We now have a structure forming here again. We have an upward trend, we have a retest, and then it continues towards the long side. We can let it run a bit longer. Normally, it should now continue towards the long side. Maybe we'll also go a bit lower again. Let's just let it run and see what happens. Let's accelerate things a bit. All right, it arrived at a much lower level here. So as you can see, the daily chart really dominates there. Therefore, it continues towards the short side here. What actions did the chart take? Yes, he has currently withdrawn the liquidity that we previously discussed at the beginning down in this particular location. The liquidity is out, and I could continue talking about this video for hours because I would definitely look for a setup down there again and wait for it to go long again, because for me, this is a liquidity grab down here, and that's why liquidity is so important. Let's just see what happened afterwards. I like to let it run a bit faster, and the whole thing here went back towards long. So, the liquidity grab happened down there, yes, completely took all these people out, and you see, look where we are now again. We are actually at the front, completely down here again, all the way up, and from there, what can one do again? Trade another correction. That means you always have to remember to trade from the extreme levels, either from the very top or the very bottom. Trading in the middle is always extremely perilous and carries a high degree of risk. If you now say, yes, that was a lot of information, I don't know how to deal with it, then we will be happy to teach you. Feel free to join us in the VIP trading members. You can find the link in the video description. We are live trading there from Monday to Friday from 8 o'clock in the morning until sometime in the evening. That means feel free to drop by, as we will teach you everything you need to know about trading. And of course, I also have a smart money concept course in case you really want to understand everything exactly as I have explained it here, with all the details and everything that goes along with it. You will find the link in the video description. Don't forget to subscribe to this channel for free to make sure you don't miss anything in the future. Like this vid, if you enjoyed it, then I'd say see you in the next vid. Thanks for watching. Until next time, take care. Bye.